There are big questions to entertain in this market, and one of them is, has the bottom come in already? This is something that I don't really want to dive too much into just in terms of answering this myself, but what I do want to do is give you guys some really good information that might help you make your own decision. Personally, for me, I don't really care about questions like this. If we're going to keep dropping down, I'm going to keep trading the downside. I'm going to keep making money on the way down. And if we're going to keep going up, well, I'm definitely going to be making money on the way up as well. That's exactly the kind of game that I like to play. So this stuff doesn't matter to me too much, but it is still important to ask these questions. And if you like data, you're really going to be enjoying this video. So if you're excited for this, do me a favor and just smash up the likes already if you haven't done so, and just double check that you are subscribed as well so that you don't miss out on this very time sensitive content. But the main thing that I want to focus your attention on is actually what's called a Puell multiple in this YouTube video. Now this is a multiple which is calculated by dividing the daily issuance of bitcoins. This means however many new bitcoins are mined on any given day, converted into USD. That number is divided by the 365-day moving average. So basically whatever it was a year ago or over the last year, you're comparing it against that figure. So kind of like a moving average. And this is a very, very important metric, because to dumb this down and bring this back into English, what this means essentially is how profitable mining is. So if we take a look at this right here, let's actually zoom this out nice and big. If we take a look at this right here, this is essentially showing us, so when we've got a reading of 1 on this Puell multiple, we're focusing on the orange line right here. Bitcoin is about as profitable as it has been over the last year. When it goes up to 4 or 8, it's 4 or 8 times more profitable today than it was over the last year. So very, very important metric, because when mining becomes very profitable, you might expect a little bit more selling pressure. And it's actually very reliable. If you take a look at when these spikes have come in, look at this, we had a Puell multiple reading of, what is this, 8 really, on this Puell multiple reading right here, very, very high, and this marked the top for Bitcoin. This was Bitcoin's bull market of 2013 stepping into 2014, and I'm sorry, this wasn't even 2030, yeah, it was. Again, we spiked right here, triggered the beginning of the next bear market. We spiked again, hit the red zone when we hit $20,000, and again, that triggered a bear market. We didn't actually hit the red zone in our last bull market, which is so annoying. I mean, the general consensus that everyone's been saying is that Bitcoin didn't rally as hard as we expected it to. I certainly expected it to rally harder overall. So we didn't even hit the red range previously. But if you're thinking ahead, you've already realized that, yes, when we drop down into the lower regions, the reason that this is important, ladies and gents, is that this is one of the beautiful things about Bitcoin. We really are getting very technical in this video. We don't do this often on this YouTube channel, but when the time is right, like right now, this is what I'm happy to bring to you guys. By the way, if you're wondering where I'm getting this data from, it's from Glassnode Studio. It is a very, very expensive platform where you can get some really good data. Guys, I paid like $9,000 for this data, so if that doesn't deserve a like, I don't know what does. That's a fucking lot of money to just see some numbers on my screen. But it's super, super well worth it, because the thing is, guys, when you drop into the bottom of this range, when you're in this green box, what that means is that mining is not profitable relative to the last year of Bitcoin's price action. Because again, the thing that we need to understand, if you weren't already aware, is that miners have fixed costs, right? I mean, people are being billed in fiat, so you got to pay for your electricity. If you took loans to buy the machines, you got to pay those loans back. You basically got to pay off your machines, maybe staff, whatever, renting for the premises that you're doing the mining in. All of these fixed costs need to be paid. And if Bitcoin is not at a very high price against the US dollar, that reduces how much profit the miners are going to be making, right? So again, when that number is very high, when that profit number is very high relative to the last year, well, you can expect a lot of selling pressure from miners. But when it's low, you start entering some potentially very dangerous situations in the market where, essentially, again, like I said, this is one of the beautiful things about Bitcoin, is that any problem that Bitcoin generally has automatically regulates itself, which is great. You don't need an outside authority to step in, because, guys, guess what happens when it's a lot less profitable to mine Bitcoin? What happens is that the weaker miners, the miners that have higher baseline costs, drop off the network. And if you can no longer mine Bitcoin in a profit because the US dollar value of Bitcoin is too low, what that means is you're going to switch off your machine and you're just going to shut down the operation, which means that whatever mining duties there are in the space on that given day will move towards the more it will move towards the mining operations that have lower costs. It's not a good thing in terms of centralization. This will centralize the network. It becomes less decentralized when this happens, but it does at least mean that the network becomes more efficient, and it also potentially removes sellers from the market. So this is why we start seeing that when we enter these green ranges right here, oftentimes it marks the bottom in the market. You come out of this green range, and it's what triggered the last bull market. Again, right here, we hit the green range. Bitcoin became very difficult to make a profit on over the last year. On this occasion, this is December 2018. And so we started to see all of that pressure, that miners were facing. And as soon as we started to come out of that, look at what ended up happening, ladies and gents. The next time we fell into it, it's not foolproof. It's not, it doesn't work 100% of the time, but it still worked out pretty well. You take a look at this right here. This was the March coronavirus crash of 2020, and Bitcoin ended up rallying very, very hard out of that. We fell back into this range again when Bitcoin was trading at about $9,000. It traded sideways for about 3 months, and then bam, really off to the races. The next time we fell into this range, guys, it happens every single time. The next time we fell into this range, we were trading in summer of last year. Bitcoin went all the way up to 60K, fell down to 30, stayed in that horrible 30K to 30, basically stayed in that $30,000 to $40,000 range for about 3 months. That was the last time that the pure multiple dropped into our green box. Yeah, and guess what? It's happened just now as well. So, these things, they generally give us really good indications for where the market might go up. And the thing is this is a very long-term time horizon thing. I'm not saying that Bitcoin is going to pump tomorrow. Fuck me. If any of you guys think that that's what I'm implying, please get the fuck off the channel right now. I do not have patience for that kind of really, really small-minded thinking. That's not what this is about. And hopefully by now, anyone that holds ridiculous thoughts like that has already been flushed off the channel, so that I'm only talking to reasonable people, that don't jump the gun on things like this, because this is a very, very long-term time horizon indicator. It's not something that you would say is going to affect the price tomorrow or today, but it is a very, very important metric, and it doesn't necessarily mean that we are going to get really, really big moves up. Sometimes we can hit the green area and stay low, but this is going all the way back to 2011. I think if we looked at this chart just with this more recent price action from 2013 onwards, and really just everything here, basically the earliest time on this chart that we hit the green box was 2015, which by the way was 7 years ago. When we look at this data, yeah, it's undeniable that we ended up getting really, really nice bounces out. On this occasion, we actually stayed in a horrible chop for basically 1 year, and I definitely don't think that that's what we're looking at right now, but we at least didn't continue dropping down. And I think that's a really, really important thing to keep in mind, because what you want to see when the price of Bitcoin drops low is that people have less incentive to sell Bitcoin, right? And again, if miners have to drop off the network because they can't profitably mine Bitcoin anymore, well, that means the work that mining is only goes towards the more profitable miners, only goes towards the miners that well, I mean, you're basically dropping off competition. You imagine that there's 1,000 people that want to buy cars, and they want to buy one car each, and there's 5 sellers. Well, if 1, 2, 3 of these sellers drop down and they're no longer active, then these 2 sellers get all the money from the 1,000 customers. That's what's happening right here with Bitcoin mining, and it means that there's overall less selling pressure in the market if only the more efficient car sellers, only the ones with lower costs that can survive harsh business downturns are around. So it basically removes supply from the market. Really, really cool. It's one of those features of Bitcoin where, guys, if you read into it, you start to realize that Bitcoin is almost like it just came straight down from heaven. Like, it's just perfect. It really is. And this is one of those examples, super nerdy. So I don't talk about it. You have to really understand how Bitcoin works in order to have a conversation about this. But that's what this is about, because it has resulted in really, really nice price moves over Bitcoin's history. Does it mean that this is going to be the first real exception? Because are we going to get a real exception now? Bitcoin's going to keep tumbling lower. 100%, it's possible. It's definitely possible. There's a lot of factors today at play in this market that just didn't exist before. Like the fact that the equities market isn't doing too well, or the fact that the dollar is on an absolute rip. The fact that we are really, for the first time in a quite large scale global recession, really. Which is the first time Bitcoin's lived through something like that. Bitcoin was made in response to the previous recession of 07, 8, 9. And so right now, this is a real test for Bitcoin. Bitcoin might fail, and I wouldn't be surprised if it did, because people don't want to hold risky assets when things get very shaky in the economy. But on the flip side of that, you look at how bearish people are on the whole. I really like seeing the fear and greed index right here. Reading of 28, yesterday 29. We've been pretty low, ladies and gents, for quite some time now. We zoom out, look at this on a 1-year time horizon. Zoom out, look at this going all the way back to 2018. Just look at how consistently low we've been, guys. It's very, very nice seeing this over the last year. Take a look at this. Yes, we did have a nice little uptrend here in our sentiment, but we still didn't really crack. We didn't crack 50. We didn't even get above 50 right here, and now we're back down into fearful territories, borderline entering extreme fear once again. These are good signs. This is telling me that people are not optimistic about the market. At the same time, we really are getting some really good signs showing us that the bottom very well might be in. Like I said, just looking at this, I haven't seen this indicator fail once, and these are the kind of things that I really like to pay attention to, because they're quite real world bits of information. This is quite important, almost fundamental analysis that we're bringing into the market, that we're bringing into this analysis and complementing it with TA, which, in my opinion, makes this very, very powerful. And I think it makes a lot of sense, guys. The thing is, for me, like I said, for the way I like to analyze the market, I don't like to make conclusions on if the bottom is in or not. I think it's quite a pointless discussion overall. I think if somebody wanted to get into Bitcoin, the best thing to do is just, kind of slowly dollar cost average in, because you don't know where the bottom is going to be. I don't know where the bottom is going to be. I don't know if it's already in, and neither do you. But by kind of dollar cost averaging in, you at least get some Bitcoin, so you're not sitting on the sidelines. And at the very same time, you will hopefully enter at a better average price than the next person who just fat fingers buys in. So it's a boring idea, and that's exactly why it works. And I think it's well worth considering. But of course, the other thing that I want to see is, do we start breaking below these lows? This is quite a clear low in our kind of midterm uptrend that Bitcoin was facing. We had this right here with these lows, and we haven't actually broken this low according to this chart. Let me just move on to my other Bitcoin chart, which has some slightly more accurate price action right here. And let's take a look at this just to see if we have broken these lows. So if I put a line right there, you can see that we haven't actually broken below this low just yet. And it's not to say that we're still doing okay. We're not. The price is in a very bad position as far as I'm concerned. Just short term, it definitely does look like another drop down could be headed our way, but we haven't dropped below this low yet, and we'd have to drop below this low to even set a brand new one. So we're still quite far away. I think that there's good arguments to be made that buying pressure is gonna kind of re-enter the market before we sweep that low. So there's a lot going on here that I think is important to keep in mind. And one of the things that I think is really interesting is looking at things like this Pure multiple, because it puts things in perspective. It shows you the current state of affairs in the market. And of course, when you've got something that's been so reliable across such a large time horizon, that to me is also very reassuring. The thing is, guys, there's quite a lot of indicators like this that, you know, have really stood the test of time and been very reliable, that are now saying Bitcoin is in a good place. And I like seeing that. You know, to me, you know, the thing is when you look at indicators like this and you have to use them in the moment in real time, it's very easy to say, you know, well, what if this time is different? What if you know, the factors that helped Bitcoin before are not present today? And you can always make good arguments for why you shouldn't believe it. And guess what? That's part of a healthy functioning market. You know, if it wasn't, you know, if it was obvious that Bitcoin should be going up, well, we would be up by now. We would be aggressively trending higher. But we're not. That means there's uncertainty in the market. That means people just don't know. Smart people don't know, and that's what makes this market quite well functioning, a well-oiled functioning machine, organism even, you know, that this Bitcoin market is. But bottom line, guys, you know, I tend to almost just push all that stuff away. I'm not even interested in thinking about it, because you know, I like to pretty much just swear by what I've been taught in terms of, you know, what reliable indicators look like, and how generally it tends to work out better for me if I just close my eyes and run with the numbers, run with the probabilities. And right now, to me, the probabilities are showing me that Bitcoin is just not as bad as most people think. I'm hearing a lot of doom and gloom. You know, I think something like this, honestly, is enough to reset the sentiment. You know, I mean, we had a lot of ridiculous sentiment for things like Ethereum. People were talking about very large price targets for Ethereum, like $4,000, $5,000, and so on. You know, setting brand new all-time highs because of its you know, upcoming merge that's happening in the middle of September. You know, so there's a lot of noise around stuff like that. But you know, we start to get a drop in the market like this, and that's gonna slap that noise right out. You know, and a lot of people are going to lose their bullish bias, and of course, that's how we're able to trend higher. So you know, sticking to the short term, what I want to see is I want to see these longs getting flushed out. We're not seeing it yet, unfortunately. They're still very high. They're building up, actually. So these are not good signs. But you know, in terms of the kind of short-term signs that I am looking for, there's still a good bit of wiggle room, you know, and in terms of very, very reliable historical indicators that I've found to be quite useful. Again, I'm liking what I'm seeing, to be honest, guys. I think it's actually not that bad at all. Now, all of this, as you know, these are all things that I'm looking to be trading in this market. All of those trades will be made inside of VIP, which you can get inside by following these steps on screen. And the trades that I'm going to be making are primarily made on Bybit. So check them out with the link in the description down below. All you got to do is head down here and you will see my Bybit link, where you can earn some really, really large amounts of money, depending on which campaigns they have available, just by signing up using my link and getting started on that platform. So this is the exchange that I trust with my trading activities. This link is now gone. This offer has expired. So if you didn't take advantage of it, unfortunately, you can't do it now, but they are still offering money for you to sign up using my link anyway. It's just not this much, you know, and if something that I trust with my trading activities is good enough for you, then I think it's well worth checking out, if for no other reason, just so that you have a functioning backup. If your current exchange goes down or gets hacked or any bad thing happens, you at least don't have to be sitting outside of the market, because you have a backup ready to go. It's a very, very good idea, and you get paid for it. So to me, it's a no-brainer. With that, I really hope you have enjoyed this video. A different one to normal, quite different actually, from the title all the way down to the content as well. I want to know how you guys feel about it. I don't usually do content like this. I don't think I'm going to continue doing content like this consistently unless you guys want me to. But you know, I think this is very, very interesting data, and it's good to keep tabs on stuff like this, you know, when the market is a little bit more quiet. Right now, we're trending up. Bitcoin is becoming a little bit more profitable compared to that last year, you know, and this is going to continue getting better, given that the last year has been pretty rough for Bitcoin. This is going to continue to get better, you know, and especially if Bitcoin rises up, you know, and that could actually be something that is quite good for Bitcoin. You know, one of the good things that I think we're in overall in this market situation right now is that, you know, there's a set amount of pain that the market needs to experience before it can even consider rallying up again, like in some meaningful ways. And we've had a lot of that pain already. The pure multiple is showing us that. So I like to stick to the facts. I like to stick to the data. I don't know, that's just me. but I really hope you have enjoyed this one, if that's you as well. If you have, you know what to do. Smash up those likes, subscribe, tick the bell, make sure that you're not missing out on this very, very time sensitive content, and I'll see you all in the next one. Bye bye.